Okay, welcome back to another video. It is 8:20 in the morning, October 7th, 2020. Before I get into your financial update, I thought I'd let you guys know. I don't know what happened with yesterday's video, but I guess I touched some kind of an online nerve. I ended up getting 25 comments on the video. I think some of them were removed by YouTube. They're all mostly spam comments. So just be super aware that when anything that has to do with a financial, but particularly a cryptocurrency channel gets popular, not to say that mine is, because it most certainly isn't, but if you get on some kind of a radar with your crypto videos, you will get all these links and comments in your comment section, and they're all scams. So just stay the F away from these. If any of these people are saying call this number, send something to this email, do this, do that, it's a scam, don't do it. So don't know what happened here, but that's kind of the deal with my YouTube channel here. Somehow YouTube was graciously allowed this channel to go over 20 subscribers, and my other channel over 250 subscribers, finally. There is, without a doubt, I'm for sure on their little shit list. Like, YouTube for sure knows what I like, and they know that it goes against the grain, so they for sure are limiting and subtracting subscribers from my channel all the time. It's like clockwork. It's like every 16 hours, 24, 28 hours, I lose a subscriber on the clock. So if you're not subscribed anymore and you still care to be, please make sure you are. But I mean, I really don't care, but I know that they're doing that. It's being suppressed, but it doesn't matter because my audience is small and niche, and I like you guys. Anyway, just wanted to let you know about that. Let's get into the actual financial update. So Trump has officially tweeted and ended talks with Pelosi, the House, in regards to a stimulus package. It's not going to happen before the election, and that's because, as you know, they want to, the Democrats in particular, but probably the Republicans too, they want to load these stimulus bills with a ton of stuff that has nothing to do with the stimulus, like cashless bail, release of prisoners, things that have nothing to do with COVID, that have nothing to do with people getting checks. Like, the bill should literally be just about one thing: money to put in the hands of American citizens, and it's about way more. Trump is not signing off on that, and he said forget about it. Maybe you guys can do something after the election. So that means that the market is not going to be pumped up with printed Federal Reserve dollars, and that will cause investors to sell off. Now, as of this moment, my personal portfolio is up 1.24%. By the way, whoever it was that suggested MVIS, that was a good tip. I appreciate that. Someone dropped a comment about a stock MVIS. It's in the green. Now, the money I put in it, it's not worth selling right now. It's like making $100 isn't really appealing to me, but it is up, so I appreciate you. I think that was you, Slava Bear, something like that. Great tip. Despite this article, I am looking at the S&P 500, the NASDAQ, and the Dow, and the only one that's down is the NASDAQ. The Dow and the S&P 500 are actually up. But let's go ahead and read this article. Nonetheless, global stock markets and crypto markets have taken a sharp downturn since President Trump has ended talks over coronavirus relief measures. So before I go any further, you can actually see that the crypto market has taken quite a hit. And when I say quite a hit, just all across the board. It's not like everything's down 20%. Most of it's just down a few percentage points, but check this out. Remember that scam I was telling you guys about? Yearn Finance? Everyone pumped it up to like 30, 40K. It's down another 17% since the last time I made a video yesterday. It is now worth $15,000. So whichever of you bought an actual full coin of this when it was $32,000, I feel so bad for you. I hope it comes back up. But, I mean, this is just going down, down, down. You have to be super careful with the hot word of the year, which is DeFi. I don't mess around with this stuff anymore. I'm really more into the lower risk cryptos. I mean, crypto is still very high risk in general, but if you stay in the top 5 here, in fact, just these 4. Forget Tether, the 3. XRP, Ethereum, and BTC is much lower risk at this point. That's kind of more or less what I do. I do own some of the others, but kind of went out of order. We did the crypto prices today. Let's go ahead and read this. On the back of remarkably fast recovery from the virus, which has taken over 210,000 American lives, Trump abruptly ended talks with Speaker Nancy Pelosi and Democrat leaders over new economic aid packages. All three major U.S. stock indexes lost solid gains from earlier in the day and fell into negative territory after the announcement, and crypto asset markets followed suit, indicating that they had become more correlated to stocks and less to gold in recent months. Interesting. I still don't think they're that correlated, but you never know. Total market cap has declined around $10 billion over the past 24 hours. The move took markets down from $335 billion to just below $325 billion. Yeah. Welcome to the last 3 years. We've been hovering around these numbers for a while now. It's not a big deal. However, on the monthly view, they are still within a range-bound trading channel and have yet to plunge to monthly lows of around $310 billion. Bitcoin led the retreat as usual in a sharp fall of 2% from 10,750 to 10,530 over just a couple hours. Since then, the king of crypto has recovered a little to trade at 10,600. Crypto analyst Crypto Hamster has identified a bearish divergence on the daily time frame with repeated testing of the 100 days moving average. It has been observed by several analysts that Bitcoin volatility and trading volumes are extremely low at the moment, which is usually a precursor for a bigger move ahead. This minor dip cannot be considered, so a dump back into four figures is looking more likely to happen in the short term. Elsewhere on crypto markets, as usual, the altcoins are getting hit harder and are responsible for most of that market cap loss over the past day or so. Ethereum has fallen back to its lowest level for almost 2 weeks in a 5% slump to just below 335 before recovering marginally to reclaim the 340 level. Ripple's XRP has lost a similar amount as it slides back to 24.5, while Binance Coin has declined to 27.40. Yep, and Chainlink and Polkadot are the two big losers. Only EOS has been able to buck the trend in the crypto top 20 and post a gain of 6% on the news that Google Cloud will join the community to become an EOS network block producer. Yeah, that's pretty interesting. Let's see what happens with that. You know, we've heard of lots of cool partnership news. So I'm not going to hold my breath, even though it's Google Cloud. It's one of the biggest and most lucrative companies in the world. One of the best tech companies. They have the top tech talent in the world, or at least some of them. And I'm going to not hold my breath on that, but that is very bullish for EOS, which I happen to hold a bit of. Maybe you do too. In other news, like I said earlier with that Yearn Finance stuff, is the DeFi bubble popping. 3 things that might revive the hype. The DeFi markets have had a rough few days over the past few weeks. The majority of the cryptos centered in the space are trading well in the red. At the same time, the total value locked in DeFi protocols has been on the decline over the past 2 days as well. According to DeFi Pulse, the TVL is down $10.15 billion at the time of this writing. That means that it lost over $1 billion since the beginning of October as the value reached $11.23 billion on September 30th. Building on that, Crypto Potato recently reported that Binance DeFi Index tumbled over 50% during its first months, and it didn't even include some of the worst performing yet popular DeFi coins. Today, the index is down 63% from its opening peak, suggesting that there's potentially more pain to come. However, there are a few things that might revive the seemingly weak DeFi market. You know what? I'm not really going to read this. Except this part. Ethereum 2.0. Yes, the first 2 bullet points are 1, a hot new trend. 2, an uptick in overall crypto market momentum. Of course, those things would be related. I think this whole DeFi thing is the exact same thing we had in 2017, only back then it was called ICO. You created a coin, you went at an ICO, people paid millions of dollars to get into your coin first, then you sold the bag you had, and they got caught left holding it when it went down. But Ethereum 2.0, this is DeFi, and Ethereum is probably, it rivals Bitcoin. It is a very serious project. So this is what I think is what we should take seriously from this article. So I will read this, but forget about the first 2. Despite the fact that there's a myriad of blockchains designed to harbor decentralized applications, DeFi, for the most part, takes place on Ethereum. Exactly. The transaction fees on the network surged to all-time highs on multiple occasions, largely because of the DeFi hype, leading many to believe that being profitable is only possible if one's a whale. Indeed, users reported that they had to pay fees upwards of $100 for making simple staking transactions, making small investors entirely irrelevant. Ethereum 2.0 is the much-awaited scalability solution aimed at fixing those issues. Its release, if successful, could easily fuel a new hyperbolic wave of interest, as it would make the market much more accessible for retail investors. Data shows that support for Ethereum 2.0 is growing rapidly. Following a recent milestone hit, the Medalla testnet has expanded to more than 75 gigabytes worth of data, as the number of staked test Ethereum on it crossed 2 million. Yes, Ethereum 2.0 is supposedly around the corner. For real this time? Like, it actually might come out this year and sometime in November. But it's going to be a real big deal, introducing a lot of things into the Ethereum protocol, including proof of stake, where you can just sit back and let your Ethereum make you more Ethereum. I think the thing is you need to have 32 ETH, which at this point, that's a lot of money, if you want to stake by yourself. Otherwise, you join a staking pool like you do for just about every other coin you stake. Moving on to a different topic, finance-related, central bank digital currencies. Of all countries, Canada is raising concerns around this. The Bank of Canada analysts raised concerns over the use of central bank digital currencies as countries around the world weigh the use of digital tokens instead of paper-based money. Be very, very dubious of your politicians who are pushing for your country to get on this digital stuff. It is super sketch. I don't like it. Titled The Security and Convenience of a Central Bank Digital Currency, the bank said CBDC users are likely to face three major risks from storing and using digital currency balances in anonymous addresses. 1. Forgetting and losing the private keys. 2. Code vulnerabilities in e-wallets and account providers, which can result in theft of the keys. 3. Falling victim to fraud and wrongdoing conducted by the account providers. Number 2 is probably the one I'm concerned about the most. Do you understand that 10 years ago, the government tried to create a website for the new Obamacare exchange law that passed and couldn't build it properly with billions of dollars? So I'm really, really dubious that our government, would be able to build a tech platform that controls the financial ability of every American and do it well enough that it is secured. I would be very, very sketched to put my money in some kind of a federal sponsored digital bank where it can easily be hacked. 3 major risks. Analysts noted that these risks will be shared between users and providers. Retail participants and CBD end users in particular would enjoy the benefits of key management and third-party security feedback to ensure no theft occurs while incurring a small risk in the form of account providers taking control or misusing user holdings. Evidence shows that theft of private digital currencies and wrongdoing by account providers are quite common. For the uninitiated, users of any digital currency have access to a private key belonging to that address must be used during a particular transaction. Losing that key of an address implies the permanent loss of the entire balance of tokens in that address. Therefore, the management of such keys is paramount, with the failure to do so leading to a permanent loss of funds and no way to regain account holdings. Unlike the norm in traditional finance, the bank said that such potential losses can be avoided if one makes use of a reputed crypto wallet. However, as the bank noted, developers of e-wallets do not typically bear liability in case of loss, quote, regardless of whether the loss results from vulnerabilities in their code or carelessness of the user. This creates an additional concern. Question: should users hold CBDCs? I mean, if you have to, if that's the only way to get food, then I guess so. If you don't have to, then no. Heck no, dude. You should be owning a physical asset of some kind if you can. The thing that sketches me out the most about CBDCs, other than the government being able to track everything you buy and keeping tabs on that, is the fact that they will be completely unbridled in putting money in people's hands and printing and creating this currency out of nowhere, and we're going to see really bad hyperinflation or even something much worse. So anyway, discussing these risks, the Bank of Canada said that their central banks must establish liability rules for the loss of CBDC similar to those that exist for banknotes and traditional bank accounts, like an FDIC, I guess, with such steps leading to users exerting a great level of care when managing their balances. Enforcing these rules, however, might not be straightforward because determining responsibility for the loss of CBDCs can be difficult, the bank said, noting, quote, enforcement of liability rules would be further complicated if the design of CBDC allows any individual or firm to directly hold the digital tokens. It added that some users may also choose to store their balances in accounts at third parties that might be out of reach of domestic authorities if they hold such tokens directly. Okay, I might be down with that. Meanwhile, the bank analyst concluded, designing a CBDC that is universally accessible, but that can be stored only at approved intermediaries, is a technological challenge that should be investigated. The report comes as countries like Singapore, Japan, Hong Kong, the US, China hope to introduce CBDCs in the coming years as cashless financial systems gain fruition and the use of physical money, which relies on contact, gets outlawed in the aftermath of the ongoing C-19 you-know-what. Yeah, I guess. Because there's a virus out there that has a 99.97% recovery rate, so let's make cash illegal. You starting to see what I'm seeing, folks? Let's go into the precious metals stuff. Gold definitely took a dip yesterday and went below 1900 again, but it's bouncing back quite nicely. at just under 1900. Silver's kind of chilling at this high 23 range. Haven't really seen much craziness happening there, except that it's gone down a little bit. So if you want to get into it, now's not a bad time. Gold, I would say. Silver's kind of like, you can get silver now too, right? I mean, we were doing these videos 2 weeks ago when these things were close. This was $2,000 and this was $28. So I mean, now's not a bad time to buy, in my opinion. And let's read a news from Kitco. The gold and silver bulls are working on price stabilization at midweek. Gold future prices are lower in early U.S. trading Wednesday, but the cash market shows firmer prices. The reason is that the COMEX gold futures market officially closed in afternoon Tuesday. Before the late afternoon sell-off, that was reflected in cash market prices. So future prices today have to reflect the Tuesday afternoon price pressure. The gold market sold off sharply Tuesday afternoon following President Trump's tweet calling for an end to U.S. stimulus package discussions in Congress. Lately, the gold market has been acting more like a raw commodity than a safe haven asset. The yellow metal on many days moves in tandem with the U.S. stock indexes. Like Tuesday, December gold futures were last down 19.30 at 1889.50, and December COMEX silver was last down at 29 cents, 0.6 at 23.62.5 an ounce. Note, if you trade gold-related or mining stocks, make sure to check out my new and physical analytical charts on stocks, okay? That's nice. Thanks, Jim. Global stock markets were mixed overnight. U.S. stock indexes are set to open the New York day session higher after selling off Tuesday afternoon following a tweet from President Trump that called for an end to stimulus negotiations. So, look, I'm not going to read the rest of this, but I think you understand the trend of the day. What's the theme for today? Wednesday, the 7th of October, is that because of the stimulus relief package discussions going nil and ending, the market has taken some hits in certain places, though, like I said, only the NASDAQ was down when I looked just now. So that's my update. Again, just a warning, my channel seems to have been on the radar of some scammers, so be very careful at all these silly comments that make it to my YouTube channel. I actually always set my videos so that all comments are allowed to be posted. I really don't want YouTube filtering even the scams, so they get posted. Just be careful, all right? And with that, have a great day, and I'll see you tomorrow.